The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 27 February 2026. Well, this one will be brief. So much going on in geopolitics, and the main thing is well above and beyond the precious metals, and that is, of course, the breakout in war in Iran, which is all over the web right now. I won't add to it, although if you follow me on X, I did post a couple, what I think extremely important memos to read regarding what this war is all about. You can read and digest and make your own opinion. I just published the March 2026 Morgan Report, and I posted an outline of it here on LinkedIn. I won't read it all to you, but the main thing to take from this is we talked about AI, we talked about uranium, where uranium is, where it's going, and of course the whole editorial that I wrote was packed with information about what's going on in Mexico with the cartel situation and what impact this might have on the mining industry. Having said that, I'm going to make this very brief this week. I do want to reiterate what I've said in the past, and that is that many colleagues in the gold and silver space will advocate real metal first. You don't touch it, you don't own it. And I adhere to that. But I'm not a metals only person, and there's several reasons for that. But I do and have and will consistently say, if you're only going to buy into this sector, then just buy the real metal and forget everything else. If you are able to or wish to leverage, the best leverage is through the mining sector. And I want to point out a couple things. Number one, our top pick in the silver space is up 40%. 40 times, which is equivalent to $200 silver. And right now, silver is pushing into the low 90s right now as I'm doing this update. So it would outperform by double. Secondly, if you bought when we recommended it, you would be getting a 15% dividend. Now that's buying at a much lower price than it is today. It's a very low yield, but still you're getting a dividend. So that 40 times factor, if you add in the dividends over the last decade or so, would be much bigger return than 40 times. However, I'm just going to leave it for the price appreciation alone. Secondly, getting out of the market. That's something that a lot of people are learning the hard way, that getting out of this market in the physical realm is not all that easily accomplished. And when accomplished, you might be taking a huge hit on the bid-ask spread, which can be tremendously large and has been in North America for really quite some time. Whereas had you held this stock recommendation that we've had on our list for a very long time, you would be getting very little slippage. I mean, you would be getting basically that price. So you would gain the entire 40-fold increase if you bought when we recommended it, not counting the dividends. And on top of that, the slippage wouldn't be there. And lastly, the capital gains treatment would be far superior in most jurisdictions than what the physical gold and silver tax implications are. So that's, to me, very, very logical, concise, and credible information why you might consider doing both physical and top-tier cash-rich unhedged companies, blue chips in other words, as a mainstay. The one I'm speaking about is one that you could put in substantial funds into. And a 40-fold increase is something that most junior investors dream about. And yet this one was so safe that we said go ahead and load up on it way back when. It's still worth buying. It is going to go higher. There are a lot of reasons for that. But nonetheless, I do want to point out that there are advantages on both sides. But just realize that there are reasons to do both if you're so inclined. We did do a lot of talk about some of our picks. We're going to do it in two parts. And for example, one, I won't read the name of it, but let's see what announced. One of them announced an increase in their dividends, and it's hitting all-time highs. Record cash flow for the fourth quarter, record revenues, cash flow and earnings are, I won't say off the charts, but substantial. So that's what we're seeing in this sector, and it's undervalued. Gold and silver are always at a value, whether it's undervalued, fair valued, or overvalued. That's what it is. And the stocks do the same thing. The point I'm making is stocks are undervalued relative to the price of the metals. So that's very much an advantage to someone that's coming into the sector and wants to, let's say, gain an advantage with known facts rather than speculation. And again, less slippage, especially if you're in some of the top tier companies. So I'll leave it there. That is the weekly perspective with David Morgan. I will be back next week.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.